Welcome to the Deep Dive. We're your guides here at Talk Tickers, and today we're digging into the Q2 2025 earnings call from Kazatomprom.
That's right. And Kazatomprom, well, it's crucial to understand just how significant they are.
Absolutely. We're talking about the world's largest natural uranium producer, a really major player in the whole global energy scene, and definitely key for the energy transition discussion.
Couldn't agree more. And, the market's reaction to this particular call was, well, pretty positive, actually. Almost a sense of relief, maybe. Quiet confidence.
Relief and quiet confidence. I like that. It sounds like the messaging landed well.
It seems so. Management's steady hand, their messaging, it really seemed to resonate.
Yeah.
Generated some good technical interest, too. And this wasn't just, blind optimism.
No.
No, it's backed by some increasingly strong fundamentals in the uranium market itself. The call really highlighted that.
Okay, good context. So before we get into the strategic weeds, let's quickly hit the main numbers for the quarter. What did we see?
All right, so consolidated revenue came in at PZT 660 billion. That's Kazakhstani tenge. Now, that figure was actually down 6% compared to last year.
Down 6%. Okay, but context is key here. Right.
Exactly. Management was pretty clear this is mostly about lower sales volume, and that was a strategic decision on their part.
Right. Not necessarily a demand issue, but the interesting part, for me anyway, was the operating profit. That actually jumped.
It did, quite notably, up 12% year over year, hitting KZT 254 billion.
And the reason for that bump?
Largely because they used a lower share of purchased uranium from their joint ventures when selling to third parties. So better margins on those sales.
Ah, okay. So that signals more control over their own supply chain, better profitability. In this market, that kind of reliability, that independence, that's powerful.
It really is. It's a statement. But on the other side of the coin, adjusted net profit did dip slightly, down about 5% year over year.
And what drove that?
Mostly a net foreign exchange loss of about KZT 12.7 billion.
Yeah.
That's a sharp contrast to the gain they saw in the same period last year. So that swung the numbers a bit.
Got it. So strategic moves hitting revenue, but operational control boosting profit, offset slightly by FX. Interesting dynamic. What about costs? Always a big one for miners.
Always. And yeah, there were pressures. C1 cash costs, that's basically your direct mine site operational costs. They were up 6% in US dollar terms.
Okay.
And the all-in sustaining costs, which is a broader measure, including the CapEx needed to keep production going, that rose 10%, also in dollar terms.
What was behind those increases? Any specific drivers?
Oh, yeah. The big one was sulfuric acid. Costs there surged an incredible 46%.
46%.
Wow. It now makes up 15% of their total production costs. That's up from 13% last year, so quite a jump.
And sulfuric acid is critical for their mining process, right? And situ leach.
Absolutely vital. We also saw total gas costs jump 43%, and transportation costs went up too. That was partly due to shifting delivery destinations and using the Trans-Caspian route more, which is just, well, longer and more complex logistically.
Those are some serious headwinds, especially that acid cost. Yet, despite all that, the company seems pretty confident financially. Talk about the dividend.
Right. The dividend was KZT 328 billion paid out for 2024. That works out to roughly 2.3 billion US dollars in total.
Which is huge.
It's the highest in the industry. It really signals strong confidence from management in their cash generation, doesn't it?
Definitely speaks volumes about their outlook. Okay, what about sales guidance? Any changes there?
A slight tweak. They reduced their capital sales volume guidance by 500 tons. But, and this is important, it was because a customer requested a shift in their delivery schedule.
So not a reflection of lower demand overall.
Correct. And crucially, the overall group sales guidance for 2025 is still intact. That's key. They're holding firm on the bigger picture.
And inventory levels, working capital.
Look pretty good. Robust inventory levels maintained. And they saw a big drop in receivables as payments for Q4 2024 sales came in. Seems like pretty efficient working capital management.
Okay, so pulling these numbers together, it paints a picture of, let's say, strategic discipline. They're navigating these market shifts, focusing on long-term value, maybe not just chasing volume right now.
I think that's exactly right. It really sets the stage for the deeper dive, doesn't it? How are they positioning themselves strategically, not just to handle these headwinds, but actually capitalize on these massive shifts happening in global energy?
Yeah, let's get into that. Their operational discipline seems key.
Paramount. Their whole approach is very market-centric. Disciplined sales, keeping a strong inventory position. It lets them meet their delivery promises reliably while still having flexibility.
Which is smart in a market where others might be tempted to just pump out volume.
Exactly. They're holding firm, looking at the bigger supply and demand picture.
So what does this mean for future production? There's been talk about their capacity going forward.
Yeah, management hinted that 2026 production might actually tick up compared to 2025. That's encouraging. We'll get specific guidance probably in early February.
But isn't there also a planned reduction compared to earlier levels?
Yes, that's true. The nominal 2026 production level, looking at the 100% basis across all operations, is expected to be about 10% lower than it was back in 2021.
Okay, why the decrease then?
It's mainly adjustments at the Budanovskoye joint venture, related to revised plans for water management and also health and safety regulations. Management frames it as moving towards more sustainable use of their mineral assets. It aligns with their longer-term development strategy out to 2034.
So less a forced cutback, more a planned, sustainable adjustment. That makes sense. It's about optimizing for the long haul.
Precisely. Not just reacting to market conditions, but managing their resources strategically.
Okay. And circling back to those costs, that huge sulfuric acid spike, are they doing anything about that? Any relief in sight?
They are. They expect stable supplies for 2026, which is good news.
Yeah.
But the really interesting part is they're building their own additional sulfuric acid plant.
Ah, vertical integration.
Exactly. Construction's on schedule, and they expect it to be completed by Q1 2027. It's a critical move to, buffer themselves against future cost spikes and reduce reliance on outside suppliers who, well, have clearly been making hay while the sun shines in this tight market.
Makes perfect sense. Secure your own supply, control your costs. What else stood out on the project front?
Well, the big 6,000-ton processing shop at Budanovskoye is moving along as planned. They mentioned health and safety issues there are resolved, and they're finalizing contracts with subcontractors.
Any other developments?
One interesting corporate note. Their CEO was elected to the World Nuclear Association's Board of Governors. That's actually a first for Kazakhstan. Definitely raises their international profile.
Good point. And capital spending. They spent less in the first half, right?
They did, but management sounded confident they'll still meet the full-year guidance. They explained most of their big CapEx tends to happen towards the end of the year anyway. Pretty standard for large projects, so not really a red flag.
Okay. So when you pull all these spreads together, the operational discipline, the cost management, the strategic production adjustments, the project progress, it really underscores the investor context, doesn't it? This whole shifting global energy landscape.
Absolutely. And Kazatomprom's view is clear. This second nuclear renaissance, as people are calling it, isn't just some short-term fad. They see it as a lasting structural shift in energy policy globally.
They mentioned Japan, right, as an example.
Yeah, they pointed to Japan's plans for new nuclear plants, even after Fukushima, as really strong evidence that countries are seriously reevaluating nuclear power for the long term.
And that reevaluation brings up a huge theme from the call: security of supply.
Oh, massively. It seems to have become the #1 priority for utilities everywhere, U.S., Europe, Asia. Often it's even trumping price considerations now.
Reliability over cost. That's a fundamental shift.
It really is. And it's driving a lot of active contracting discussions right now. People are looking to lock in long-term supplies. The upcoming World Nuclear Association Symposium, just a couple of weeks after the call, was flagged as a potential catalyst for even more deals.
Okay, so utilities are scrambling for secure supply, but what about the actual supply? Is there enough uranium long-term?
Well, according to industry forecasts discussed, not really. There's a projected cumulative supply deficit of around 570 million pounds of U3O8. That's the standard form uranium is traded in by 2040.
570 million pounds. How big is that deficit in real terms?
To meet that gap, the market basically needs the equivalent of another Kazatomprom-sized producer to come online.
Wow.
And the problem is bringing new supply online takes a very long time. We're talking 8 to 15 years, typically, from finding the uranium to actually producing it. It's a huge structural challenge.
And meanwhile, demand could keep growing.
Potentially significantly. Look at Kazakhstan itself. They plan to build 3 nuclear power plants. That alone would create substantial domestic demand, maybe 400 tons per plant per year. Over their lifetimes, that's what, 72,000 tons cumulative?
That's a big chunk just domestically.
Then you've got India planning to nearly quadruple its uranium imports by 2033. Another massive future market opening up.
So Kazatomprom is seeing these trends. Are they looking beyond just mining? Downstream, maybe?
They are exploring it, things like conversion and enrichment. But they were clear, any moves there depend on the economics looking right and having guaranteed demand locked in first. Sensible approach.
And exploration, finding more uranium.
Huge priority. They mentioned strong government support in Kazakhstan for large-scale exploration to replenish the resource base for the future.
It seems like this whole strategic narrative, coupled with the market fundamentals, is getting noticed by investors. How's the stock done?
Pretty well, actually. Their stock, often traded internationally as GDRs, under the ticker NATKY, was up about 16.6% year-to-date leading up to the call. Seems the market is aligning with this long-term story.
Right, the market seems to be buying into the strategy. Okay, now for something a little different. It's been buzzing around, and we thought it was worth, well, mentioning. A quick disclaimer, as always, this is absolutely not financial advice. Please do your own research.
Definitely not advice. But for listeners who like thinking about, let's say, more aggressive long-term possibilities, there's this idea floating around, maybe call it a future shock trade concept.
Okay, lay it out. What's the thesis?
The core idea is, well, maybe a bit audacious. It takes that structural uranium supply deficit we talked about, the one projected out to 2040.
Yeah.
And it basically argues the deficit's going to hit much harder and much faster than most people currently expect.
Why faster?
Because of those skyrocketing energy security concerns globally, combined with this undeniable nuclear renaissance, utilities are already prioritizing security over price.
Right.
And new mines just take forever to build, even restarts face hurdles.
Okay, so the squeeze comes sooner and harder than models predict. And how does Kazatomprom fit into this future shock idea?
Well, the thinking is, as the dominant, reliable producer that's actually still expanding capacity strategically, Kazatomprom finds itself in an incredibly powerful position. They could gain immense pricing power.
And the outrageous part of the trade.
It involves taking a highly leveraged, long-dated bet on Kazatomprom, maybe through something like deep out-of-the-money call options. The gamble is that the current long-term uranium price forecasts, say around $80 a pound, are just fundamentally too low. Way too low to incentivize the massive amount of new supply the world is going to need.
So you're betting on a price spike.
A super spike, as some call it, in both the spot and the long-term contract markets. The idea is this could potentially push Kazatomprom's stock, NTK, into triple digits, maybe well before 2030, much faster than consensus expects.
So the trade is essentially a leverage bet that the market is drastically underestimating the speed and severity of the coming uranium crunch, and Kazatomprom is the prime beneficiary.
Exactly. It's explicitly playing on those long lead times and high costs for new supply. You're betting on a significantly tighter market sooner, benefiting the established, reliable leader. It's aggressive, definitely speculative, but based on that accelerating fundamental shift argument.
Interesting stuff to think about, for sure. So there you have it, a deep dive into Kazatomprom's recent performance and strategic positioning. Understanding these calls, the details, the big trends, even the speculative chatter, it's all part of staying informed, right?
Absolutely. Crucial for navigating what's happening.
And remember, always do your own homework. Think about how these insights fit into your own view of the energy future and the company shaping it. Thanks for joining us on this deep dive.
Yeah, thanks everyone. Keep learning, keep exploring.
And stay well informed.